Hello and welcome. I'm Blair Blackwell, and this is the Daily Market Brief. Let's catch up on what's moving in markets today. Good morning. It's Wednesday, January 7th, and this is your London Open Brief. Oil is under pressure on Venezuela headlines and corporate maneuvering. The dollar is softer as Asia digests Australia's sticky inflation, and India's central bank steps in. And Europe is watching a tense Greenland debate alongside slower climate progress at home. Starting with macro and currencies, the Japanese yen is firmer as the US dollar eases, helped by a market that still sees the Bank of Japan edging away from ultra-easy policy while the Federal Reserve sounds more dovish. The Swiss franc is bid as well, with safe haven demand linked to tensions around Venezuela weighing on dollar-franc. Meanwhile, the Australian dollar is pushing to 15-month highs, even after Australia's November inflation slowed on the headline, because core price pressures remain above the central bank's target, and a February rate hike stays on the table. Across Asia, the Indian rupee strengthened after the Reserve Bank of India's first intervention of the year, and the New Zealand dollar is range-bound ahead of a busy U.S. data slate later in the day. Energy is front and center. West Texas Intermediate crude is slipping, with traders eyeing immediate support in the mid-50s, as talk of increased Venezuelan supply to the United States cools the outlook. Adding to the flow, Chevron and Quantum Energy Partners are reportedly preparing a roughly $22 billion joint bid for Lukoil's international assets. A reminder that deal activity is reshaping parts of the oil patch. The softer oil backdrop is pressuring the Canadian dollar, with dollar Canada holding modest gains. Gold, after a strong two-day run, is easing on profit-taking ahead of key U.S. releases, though some on the street still see scope for higher prices this year. In Europe, equity futures point to a mixed open as political rhetoric over Greenland lingers. European reporting notes Washington already has extensive military access there, and former NATO leadership is pushing back on the case for any seizure. But the conversation is unsettling for allies. Closer to the economy, a think tank warns Germany's emissions cuts slowed again last year, complicating climate targets. On the data front, Euro-Canada is holding recent gains ahead of Germany's retail sales and unemployment figures due later today. Turning to the market tone, a softer dollar and firmer yen typically support risk sentiment outside the United States, but safe haven interest in the franc and softer oil are reminders of lingering geopolitical and growth anxieties. That mix tends to favor commodity importers and weigh slightly on energy-linked currencies. Looking ahead, it's a data-heavy North American session, with labor market figures later in the week setting the tone for the dollar. For Australia, the key checkpoint is the quarterly inflation report on January 28th, ahead of the early February central bank meeting. Europe's focus today is Germany's retail and jobs data. I'll be watching the Aussie dollar against the US dollar, looking for an uptrend to hold if markets keep pricing a more hawkish Reserve Bank of Australia. I'm also watching dollar-yen for a drift lower if the yen bid persists, and dollar-franc for further downside if safe haven flows stay in play. In commodities, I'm watching crude around the mid-50s for signs of stabilization, and gold to see if dip buyers return after the latest pullback. And for Europe, I'll keep an eye on Euro-Canada around the German releases and oil's direction. The takeaway, markets are cautiously constructive, but geopolitics and energy dynamics are keeping optimism in check. That's it for today's edition of the Daily Market Brief. Thanks for listening. I'm Blair Blackwell. This podcast is for informational purposes only and does not constitute financial advice, trading recommendations, or investment guidance.